Hallo mensen, welkom in deze uitzending. Mijn naam is Johnny Verkuringen, CEO bij Europese Goudstandaard, een Belgische dealer in fysiek goud en zilver, zowel in baren als munten. We hebben vandaag een hele speciale gast bij ons, met name Rick Roel. Rick Roel was tot voor kort president en CEO van Sprott US Holdings Incorporated en heeft zo pas een kleine stap teruggezet in deze functie, maar zal nog wel directeur blijven en hoofdaandeelhouder en zal een belangrijke rol blijven spelen in het beheer van de investeringsstrategieën bij Sprott. Om een idee te hebben voor de kijkers, Sprott beheert onder andere het Sprott Physical Gold Trust, dat fysiek goud beheert voor investeerders waarin momenteel meer dan 2,6 miljoen ounce goud zit met een waarde van 4,5 miljard dollar. Daarnaast het Sprott Physical Silver Trust, PSLV voor de kenners, dat fysiek zilver beheert waarin momenteel 131 miljoen ounces zilver zit met een tegenwaarde van meer dan 3,3 miljard dollar. Dus alleen in fysiek goud en fysiek zilver beheren zij meer dan 7 miljard dollar. Dus als er iemand in de wereld is die zicht heeft op fysiek goud en zilver, dan is het wel Rick Roel. En dan moet ik nu overschakelen op mijn beste Engels, wat niet zo super is, maar dit is meteen de reden waarom wij onze video's zullen ondertitelen. Omdat er meer mensen zijn zoals ik die daardoor veel interessante informatie over de financiële sector en de markten mislopen. Ik hoop dat u de kwaliteit van mijn Engels vergeeft en de info en de boodschap van Rick Roel belangrijker vindt. Okay, welcome Mr. Rick Roel. Tell us more about yourself and your business Sprott Holdings, please.
Well, I need to say, partially my ex-business. On March 15th, I retired from active managerial involvement in Sprott. I continue to be the largest shareholder and I believe the largest private client. I'm also a member of the board of directors. But I've, at age 68, given up any corporate managerial responsibility at Sprott so that I have more time, as an example, for teaching and mentoring and commenting, which I'm doing today. Sprott, as you suggested in that kind introduction, manages or administers about $17 billion in investor assets on behalf of 200,000 investors worldwide, primarily in natural resources and precious metals. We're particularly well known in North America for our New York Stock Exchange traded physical precious metals trusts.
Thank you. We are very glad to have you. Let us start with your general expectations for the precious metal market. Do you see an awareness change in the world of investment, and what are your expectations about the industry?
We are, in fact, seeing an awakening of interest in precious metals from retail investors around the world. It's amusing that at Sprott, we spent 5 or 6 years trying to figure out how we would communicate our story to younger investors, to millennials, to people who weren't around in the decade of the 70s. And amusingly, through social media, although we couldn't find them, they found us. And we have seen an inbound of new interest from younger people and also from non-Caucasian people globally, an interest in precious metals. At the same time that there is a renewed awakening on the part of some high net worth retail investors that the circumstances that could take gold higher, which is to say fiscal indiscipline, as an example, on the part of central governments, is something to be concerned about. What we have seen in North America very recently is sharply increased interest from the largest institutional investors in the world, pension funds, university endowments, people who have come to understand that while they could 30 years ago stuff their portfolios full of bonds and get a positive real yield, those days, given the yields that are available today relative to the CPI rate of inflation, have caused the largest institutional investors to begin to have to exit part of their bond portfolios and look for places where their long-term performance wouldn't be so negatively impacted by inflation. That's a long way of saying that really across the investor spectrum, we're seeing increased interest in precious metals.
Very interesting. Now, there's a lot going on about the shortages in the physical silver market. Can you tell us more about this situation and how it's evolving? in America?
There is definitely a shortage in the United States in retail product, which is to say 1 ounce product, 1 kilo product, that type of thing. Yeah. A shortage with really 3 root causes. One would be the incredible increase in interest among retail investors in physical silver product in the last 18 months. But another would also be the COVID-induced shutdown of the refining industry, particularly in Europe, which took wholesale product, 1,000-ounce product, and recast it as 1 ounce product or 1 kilo product. The third is much more recent, which is the amazing effort by the sort of Reddit crowd to, in fact, engineer a short squeeze in physical silver. If you would have asked me 6 or 7 weeks ago, what I thought of that, I would say a bunch of young folks are going to get spanked. I hadn't anticipated quite the number of them and the fervor with which they participated, but they have certainly tightened up the silver market. Our experience is that the wholesale silver market, which is to say the market for 1,000-ounce product or multi-kilo product in Europe, remains reasonably well stocked. In North America, while we have had challenges in the last 6 weeks acquiring physical silver, we've managed to do it. I think that Sprott may be the largest net buyer of physical silver. That is not deposit receipts or not delivery receipts, but real, true physical silver. We may be the largest net buyer in the world in the last year.
Yeah.
And it was no challenge at all until 6 weeks ago. You will note as a bullion dealer that buying gold bullion in any market you can around the world and then shipping it where you need is fairly easy because its value relative to its weight is such that you can afford to ship it. Silver is a very different circumstance. And for Sprott, as we began to use up the supplies that were available in Ottawa at the Royal Canadian Mint, then we used up the physical supplies available in Toronto and then Chicago. Yeah. But at some point in time, silver is so bulky that it's expensive to ship. And so we have encountered some difficulties, which so far we've overcome.
Okay. Okay, now let's continue. What is actually happening with the COMEX or other precious metal exchanges? Because I think you have much more info about this in America than we have in Europe. European media does not speak about this at all. Do you think there is some kind of price manipulation going on?
Well, certainly the plea bargain that J.P. Morgan Chase entered into, which resulted in fines, establishes that periodic manipulation takes place. We've seen that same manipulation in markets as large as the U.S. 10-year Treasury and in the LIBOR market in Europe. So the assertion that despite the fact that it's illegal, large players and probably bank desks don't manipulate markets, including silver, would be naive. Many markets are manipulated. The regulators don't want to hear you say that because it's a sort of vote of no confidence in the regulators. Okay, I vote no confidence in the regulators. Yes, all markets, I think from time to time, are rigged. With specific regards to the COMEX, the challenge, I think, for the institution has been simply the institution's success. There are days, single days, where 250 times the amount of silver available for good delivery trades in the futures market. I didn't say per week. I didn't say per month. I didn't say per year. I said per day. This is an astonishingly leveraged market when you think about the fact that you can use margin on futures contracts, and the futures contracts themselves can be leveraged 250 to 1 against the stock available for good delivery. The circumstance becomes almost farcical. Thus far, the COMEX has in fact met the strain, and people who have stood for delivery understand that most contracts settle for cash and the traders move on. But those people who have stood for physical delivery, as far as I understand it, have been accommodated, although they haven't always been accommodated at the in-system warehouse that they would have preferred, which is to say perhaps somebody who would have preferred that their silver be stored in New York City might find it stored in Oklahoma City. But at least it's in-system silver. At least they've been able to access it. The bigger challenge becomes if more people stood for physical delivery. If the premiums, as an example, that exist in the physical market become extraordinary enough that investors want to transact in silver in the near futures market and then stand for delivery. If you have a circumstance where the market is as leveraged as it is, as I say, occasionally 250 times contracts available for good delivery in a day, then you do have the chance for some real disruption.
Yeah.
I don't think, by the way, that the shorts will break the COMEX because the COMEX is a private institution that exists to benefit itself. And I would expect that you would see, in the event that there was a failure to deliver, the exchange change the rules, declare force majeure, suspend the market, establish what they consider to be a market price, and then insist on cash delivery. Yeah. While that would strike many speculators as not being fair play, it, I think, would have the impact on the silver market, ironically, that the longs would like to see.
Okay. That's one of my next questions, I think. We had the news that the Reddit group that was firstly involved in the GameStop story now appears to have its arrows aimed on the silver market. It seems that there is a movement for silver short squeeze going on worldwide. What is your opinion in this development?
Again, had you asked me 6 or 7 weeks ago, I would have said that this is a bunch of young newcomers who are going to get spanked by the old pros. I hadn't anticipated the size of this constituency. And while in the very near term, they may not be successful in squeezing the silver market, I say that because the silver market is so much larger than the GameStop market was, and it's so leveraged. The ability of the desks to trade against the Reddit crowd in the futures market and to stay the trade is much larger than the availability of stock to borrow and cover in GameStop. It's a much, much, much bigger game. I am amused, however, at the real shortages that have emerged. Longer term, however, I think it's important to note that what this Reddit crowd has done has greatly increased the number of people who have become familiar with the silver narrative. And if you assume that the speculator around the fringes of the Reddit crowd moves on to the next story, what you're going to see is several tens of thousands of young people who have been introduced to the silver narrative and will cease to be tourists, but will become part of the constituency, both for silver and for the silver equities, to the better, I think, of that market.
Okay, now, some people say there is already a shortage in the silver market, or definitely will be in the future. Others believe this is to be incorrect. What is your opinion about that?
There is definitely a shortage of retail product in North America. If you go to buy 1 ounce product or 10 ounce product or even kilo product, it's available, but it's available with as much as a 40 or 45% premium on the spot silver price.
It's the same here.
I don't know the circumstance in the European market with regards to physical product, but the North American market is effectively sold out. There was a dealer who put in place 1,000 ounce product. As I understand it, they bought 60 and they sold out in 24 hours. It's interesting to see the demand come up from the very small product to where dealers have to sell the institutional product to have something available and have that sell too. All I can speak about in terms of wholesale availability has been Sprott's experience, and I only have that anecdotally. The desk obviously isn't going to tell me precisely what is happening internally. And I can say that we have continued to be able to acquire physical silver to support our trusts. The trusts, as you know, unlike the ETFs, can't hold delivery receipts or depository receipts. In other words, none of our assets can be promises to pay by counterparties. We have to own physical silver.
Yes, we understand.
And as a very large buyer, we've enjoyed extraordinary service from the bank desks. In other words, we've acquired physical silver. Now, did they actually own the physical silver that they sold us? Did they borrow it? In effect, are they short? We don't care. We paid for it. We have the silver.
Yeah.
That's their problem. But in direct answer to your question, thus far, we have been able to transact. And I think the industry at our scale has been able to transact. But I understand from the point of view of physical dealers like yourself, that having inventory available for customers at prices reasonably related to spot has been very, very difficult.
Yes, that's correct. That's correct. Okay. My last question for you. I would like to know how you expect the prices of gold and silver to develop over this and the next years. What are your expectations?
If you give me 2 or 3 years, I have to say I'm extremely bullish. I really think that the wind is in gold sails. In my experience, precious metals have moved for many reasons, but mostly they have moved because investors and savers have been concerned about the efficacy of conventional savings products, particularly savings products that are denominated in clearing currencies like the euro and like the US dollar. And I think that savers need to be concerned with artificially low interest rates on preserving their purchasing power in conventional savings products denominated in either dollars or euros. Quantitative easing is an example, popular in Europe and popular in the United States, where if you and I did it, it would be called counterfeiting. If the government does it, it's of course called policy.
Yes.
But you can't debate that it debases the currency and causes people to be concerned. And it's taking place at a wholesale level in both markets. The second is debt and deficits. Again, in the European community, but also in North America, there are on-balance sheet, which is to say bond obligations, and off-balance sheet liabilities, things like pensions, healthcare systems, where the net present value of the deficit appears to me to be unserviceable. And we aren't servicing it anyway. We're adding to it. The European Union, most of the constituencies of the European Union, and certainly the United States, are running massive, massive budget deficits. So rather than paying down our collective obligations, we're increasing them. But the most important are real and nominal interest rates. A negative real interest rate, well, think about it. It's not a force of nature. The idea of interest is that somebody pays you rent on your money so that they can use your money now, and you forestall consumption. The interest rate is also insurance, in a sense, to you in terms of the time value of the consumption that you give up, and it goes to the credit quality. I would argue that the entirety of the EEC, but also the United States and Canada, as sovereign issuers, are of substantially less quality today than they were 10 or 12 years ago, simply because of the debt to deficit. The idea that you should pay a government to store your money for you, in other words, the idea that a European saver should be excited about the idea that he or she lends money to a European government and gets back less 10 years from now than they get now, is farcical. And this circumstance, I think, will be good for precious metals prices. In the very near term, it appears that investors on both sides of the Atlantic believe that the pent-up demand and the liquidity in the system will lead to a post-COVID recovery. And the consequence of that is, at least in the United States, that the 10-year end of the yield curve has been very strong. It's risen. So nominal interest rates, I think, are higher, and gold has been punished as a consequence. If you were to see a circumstance where this increase in rates came to be believed as permanent, particularly if the interest rate went so that there was a real yield on 10-year securities, it would be very hard on the gold price. My own belief is that as the increase in the interest rate in the U.S. 10-year Treasury works its way through the U.S. economy, that the economy might not be strong enough to accommodate it. And I think if you saw a decrease in the U.S. 10-year yield, just as if you would see an increase in the 10-year Eurobond yield, I think you'd see sharply stronger precious metals prices. When that occurs is anyone's guess.
Yeah, we hope soon. Huh? Okay, Rick, thank you so much for sharing this information with us. We appreciate your time and effort, and we hope to see you again in the future. Thank you.
I look forward to it.
Very much.
Thank you for your efforts around precious metals.
Thank you. Zo, kijkers, net zoals wij is Rick Roel ervan overtuigd dat de toekomst voor fysiek goud en zilver er bijzonder goed uitziet. Volg ons YouTube-kanaal voor aankomende interviews met meer experten van over heel de wereld. Word ook lid van onze besloten Facebookgroep Silver Squeeze, goud en zilver, waarom, wanneer, hoe en waar. Zo blijft u op de hoogte van alle nieuwe updates over de markt. Wilt u meer info of advies over het aankopen van fysiek goud of zilver? Ga dan naar onze website www.europeesegoudstandaard.be. Bedankt voor het kijken en tot een volgende video.